Well, hello, Maverick traders. It's Monday, the 22nd of August. Joe with you here. I've got my opinion on what I've seen over the last couple of days. It is an opinion. Take it for what you will. So let's get into a market analysis, guys, because I said this on Wednesday that the markets were due for corrective action. And I said this with a grain of salt because I'm like, hey, this is my opinion. Due. The word due, it doesn't mean that they have to. However, I got lucky, and they did. But today's move lower was a little bit more aggressive than I would have expected. This could be just a drastic reaction to the expectations of a correction or something more substantial. But in the news, guys, I did not find anything that warranted the gap. Markets fall from weekly resistance. It was there. You can see on this chart, and I've seen this chart. Not only have we pulled it up over the last week or so, but we're starting to see this on major news areas where, hey, check it out. Over a week, this isn't very strong, yada, yada, yada. You guys know the results. So, but there's nothing major in the news past the Fed here. Their tightening schedule. They expect to pivot and continue to increase rates on their current map. So over on the index, the Dow, the S&P, and the NASDAQ all down about 2%. NASDAQ 2.5%. Everything else about it between Russell's about 2%. Oil, gold. A pretty good or substantial move to the downside. Advanced decline line there. 80% to the downside, above the 50-day moving average. We can still see that although this is a pretty good correction from Friday to Monday, it's still we're still pretty strong overall when it comes to above the 50-day moving average. So specifically, the move to the downside did put us below the 20. However, we are still above that resistance level. Now, Rob and Darren may mention this on Sunday's class, talking about 415. I'm going to go ahead and say 410, 415. It's still within that area. You guys can see this. The squeeze, I'll put this here right around end of May into June. There's a range there. It actually correlates back with May if you take a look at it. So I still believe that we are in that area. Now, the volume did increase a little bit, but we are still above that 410 level, and it is an aggressive 2 days down. We haven't broken any sort of support level to this point. The Qs are the exact same. A little bit more, a little bit lower because it did have, folks, I'm going to call it this, a false support level there the first week of August. The true support is at 310. You can see that it hit it in the end of May. Also, at the beginning of June. So where we are at the heat map, everything participated. I truly believe this was that sell-off that I talked about in Wednesday's class, saying we are quote-unquote due for a pullback. I love the word due. It's just a dart. It doesn't matter if I'm right or wrong or when the timing is. However, the correction looks like it's starting. Everything's red. You can go ahead and take a look at any of these companies outside of news. There's nothing really bad with them. It's just an overall sell-off in the markets. So market outlook-wise, I have to stick with a +1. I truly think that we are in a bull pullback or at least some sort of retracement to that consolidation level, at least in the SPY here around 310. I can't give it anything less than that. The only thing that we're below is the 20-day moving average, but it's a healthy pullback. We have been setting higher highs and higher lows for quite a bit. So above the 50, 20-50 slope, still looking good. Everything's great. I have to give it a +1. Now, in the short term, I can be bearish. That's okay. On the short term, I'm going to give it a 0 to -1, thinking that we're going to. I'm looking for that 410 support there on the SPY. We might break that or at least threaten it over the next day or so. We've seen this many times. If it's a huge hammer candle during the day, I'm like, oh my gosh, I should be -3. But when it closes, it comes back up and closes above that level. I'll go right back to my -1. So take that for what it is and don't overthink it. Really don't. It's just corrective action. Now, I don't have a lot of bulls to look at, obviously, but I do have those two sideways trades that actually carried through, and Rob and Darren made mention of both of these, I believe, on Sunday's class, and then we've got some carryovers from the bullish or the bearish side from last week on the Wednesday class. Let's jump into sideways, and what's cool about this is PTEN here just seems to want to consolidate or symmetrically triangle, right? Down from the 17, 15, from 13 up to 15. I love this. It's a tight little symmetrical triangle pattern. If you're going to err to one side and it being in energy, I would do it to the upside. But if you want to go a little wider, you guys could look at the 17, 13 condor. Maybe a 14, 16, 15 butterfly if you want to get super tight, shorter term. I'm not sure the expiration cycles or the strike prices available, but I do like both those ranges. Here's BHP. This has got that 58 resistance. I believe Rob made mention of this on Sunday's class at 52.5 to 57.5. So it's up on its upper range. It does have kind of a bullish feel to it here. If it can stay above that the 20 and the 50-day moving average, or more importantly, like around the 56 level, I could see something sideways to up. Definitely above 54, maybe slightly below the 58. So if you guys want to play something sideways to up with a little bit more bullish prowess, I'm totally fine with that. Just my 2 cents. Moving on to the bears. Matches was a bear that came across on the Sunday room 2 weeks ago, back again on Wednesday, and it's been wonderful. So all you guys that saw that it was not going to break above that 20-day moving average resistance around 70, you are correct. I thought sideways to down at 65 would be great, and guess what? It broke 65, and we're right back down to that 60 support level. So great trades on everybody who did something sideways to bearish. My diagonal put guys, my vertical spreads, it's looking good. Moving forward, if you believe that what's happened today and yesterday or Friday is going to carry forward and these markets are going to fall apart, you could see that this is on its way below 60, and it could move substantially forward. Do your own research. Snap a fibbo on this. I'm not sure where it's going to go from there. Here's Abbv. More of a sideways trade, but I did like today's candle, and I do like the fact that this could not really get even back above its 20-day moving average over the last 4 or 5 days. So 140 is pretty strong support, and it has been for the last week. But the crossover on the 20 and the 50, the high that it set previously, it's just not doing any good. So I'd be more of a diagonal on this. Nothing too aggressive to the bear side just yet. Sideways to down makes sense. MPW, the last one I'm going to talk about, and I like this because we had a pretty good spike in the volume 3 days ago, right? And then it hesitated at 16, but look at the volume that it had on Friday, and it looks like it's given up the ghosts. Now, it's kind of tough because we've seen the same volume if you take a look back here early August, and it bounced from that point. But I do see bouncing points at about 15.25. However, if it can slide from where it's at with market weakness and it can get below that level, then I think 15.25 turns to 15, which could turn down to 14. Just my opinion, guys. It's early yet, but hey, it kind of is what it is, and that's kind of all that I've got. So let's move on to our summary here. So we did see that bearish move continue from Friday. Pretty aggressive today. It hit resistance levels on both the diamonds and the spiders in October of 2021 and earlier this year. So keep that as a factor when it comes to that weekly chart that I showed a little earlier. No specific catalyst other than that the markets did need to correct. There's nothing super bearish out there. We do have that symposium coming out where the Fed's going to go up to Wyoming and talk about what needs to be done going forward, but I don't think they're going to get off track on the fact that we need to curb inflation on the economic side. This has really not much to do with market, as we stated earlier. Stronger than expected Chicago Fed. Check your potential trades for earnings. We just don't have anything on tap yet, or we're out of earnings season. So this is going to be more of a general market move over the next little bit than it is anything specific to any number. All right, guys. Thank you so much for joining me. We'll talk to you next time. Bye, everyone.